I'm not surprised there's a little volatility in markets. As the market really adjusts to just the pace of adoption and how this capital that's being invested is producing returns, you'll see ups and downs and speed bumps, some drawdowns, some accelerations. And I think that's going to continue for a number of years. But the general direction and the opportunity set and the power of these models, I know that Google just released Gemini 3, yesterday, and what people were saying about that, the power of these models and the ability to ultimately deploy this in the enterprise and really drive huge productivity gains is very exciting.
When markets start crashing, most investors go into full panic mode. Charts bleed red, volatility explodes, and every headline feeds more fear into the system. But in these exact moments, one critical question separates those who win from those who worry. Who is actually stepping in to buy? Because when the crowd is scrambling for the exits, the smartest money in the room is quietly positioning itself for the next move. And right now, that smart money belongs to Goldman Sachs. Today's video, we're breaking down 3 stocks Goldman Sachs is heavily buying, even as the broader market sells off. 3 companies positioned at the core of the AI wave, enterprise evolution, and digital acceleration. These are businesses Goldman believes are worth owning now, not later. We'll explore what they do, how they're performing, and why Goldman views this volatility as an opportunity instead of a warning sign. First on the list is AppLovin Corporation, ticker symbol APP, a company that perfectly illustrates why Goldman is buying the dip instead of running from it. Goldman increased its position by over 63%, adding more than 1.24 million shares, bringing total holdings to more than 3.22 million shares, valued at over $2.3 billion. That level of accumulation during a correction sends a powerful signal. Goldman sees long-term strength that the wider market is missing. AppLovin has transformed from a simple mobile game publisher into one of the most advanced AI-powered advertising platforms in the world. Its core engine, Axon, uses machine learning to optimize ad performance in real time, constantly improving efficiency and returns. The results speak loudly. In its most recent quarter, AppLovin posted $1.4 billion in revenue, representing a 68% year-over-year surge, one of the fastest growth rates across the entire tech landscape. Even more striking, its EBITDA margin reached 82%, a level of profitability rarely seen in ad tech businesses. This is exactly the type of AI-driven transformation Solomon was referring to. Real-world deployment, real productivity gains, real revenue impact. And AppLovin is far from finished. The company is now expanding into e-commerce advertising, a market significantly larger than mobile gaming. Management expects e-commerce to make up roughly 10% of total revenue next year, and with current penetration still under 1%, the runway remains massive. Goldman also recognizes the upside in AppLovin's current conversion rates, which hover around 1%, leaving enormous room for improvement. The company is now testing AI-generated ad creatives, automated campaign optimization, and a self-serve onboarding model that allows rapid advertiser growth without heavy manual involvement. While the stock has faced pressure from an SEC inquiry and short seller claims, execution continues to improve. Financial performance remains strong, and the core business model is scaling fast. In Goldman's eyes, short-term noise doesn't alter long-term fundamentals. It simply creates entry point. Next, the second stock Goldman is aggressively accumulating is Taiwan Semiconductor Manufacturing Company, ticker symbol TSM, the backbone of the global AI revolution. Goldman boosted its stake by 12.7%, adding more than 1.37 million shares, bringing total ownership to 12.13 million shares, valued at over $3.39 billion. The reasoning is straight. TSMC recently delivered the largest quarterly profit in its history, with revenue reaching $33.1 billion, a staggering 40% year-over-year increase. This growth was driven by soaring demand for its advanced 3nm, 4nm, and 5nm chips, which power NVIDIA's Blackwell GPUs, Apple's M-series processors, AMD's AI accelerators, and the custom silicon used by giants like Google, Amazon, Tesla, and Meta. Nearly every major AI breakthrough begins with a TSMC wafer. The company also recently manufactured the first US-made NVIDIA Blackwell wafer at its Arizona facility, marking a major milestone in reducing geopolitical risk and strengthening domestic production capacity. Meanwhile, expansion continues globally with new fabs in Japan and increased production in Taiwan, backed by a sweeping $42 billion investment plan. This perfectly reflects Solomon's message. AI adoption may not be instant, but its long-term trajectory is unstoppable. TSMC controls over 70% of the world's advanced chip manufacturing, maintains gross margins near 60%, and continues raising guidance as demand remains relentless. Even amid market turbulence, its dominance, scale, and diversification make it one of the most critical companies in global technology infrastructure. Goldman isn't buying here by accident. They're buying because TSMC is fundamental to the AI age. Finally, the third stock Goldman is loading up on is Oracle Corporation, ticker symbol ORCL, a company many still underestimate. Goldman increased its stake by 20.7%, adding 2.58 million shares, now holding 15 million shares worth more than $422 billion. This isn't a casual move. It's a strategic declaration of confidence. Oracle has quietly reinvented itself into one of the most powerful AI cloud players in the world. Its cloud revenue surged 28% year over year, fueled by a massive $300 billion deal with OpenAI and total remaining performance obligations surpassing $455 billion, a jaw-dropping 359% increase in just 1 year. That backlog alone explains Goldman's conviction. Oracle has years of revenue already locked in. In its latest quarter, Oracle delivered $14.9 billion in revenue and $1.57 in earnings per share. While slightly below estimates, growth remains strong. More importantly, cloud infrastructure revenue jumped 55%, supported by multi-billion-dollar contracts with Microsoft, Google, and Amazon. CEO Safra Catz confirmed 4 huge AI contracts were signed in a single quarter, with more on the horizon. Larry Ellison also revealed Oracle's upcoming AI database, enabling businesses to run models like Gemini, ChatGPT, and Grok directly on Oracle's platforms. This could unlock massive demand as companies rush to integrate proprietary data with AI systems. Oracle continues expanding global data centers and strengthening multi-cloud compatibility, a space where few competitors can currently match its scale. Yes, debt remains a factor, but execution continues to improve. Demand is real, the backlog is massive, and the shift to AI-driven cloud infrastructure is accelerating faster than expected. For Goldman Sachs, Oracle is no longer just a legacy software company. It's becoming a dominant AI force. So there you have it. 3 companies Goldman Sachs is aggressively buying while the rest of the market panics. These aren't speculative gambles or hype-fueled trends. These are industry leaders positioned at the intersection of AI, cloud computing, and next-generation digital infrastructure. As David Solomon said, markets rise and fall, but long-term secular trends are what build enduring wealth. And the trend behind AI and high-performance computing has never been stronger. Volatility breeds fear, but it also creates opportunity, especially when you follow institutional investors who have navigated every major economic cycle for over a century.